The initial public offering of angel broking of around 600 crore rupees has opened for subscription today. Now, around half of the issue is an offer for sale from promoters, from individuals and from the institutional investors, and the remaining 300 crores is a fresh capital raise. In our Ideas for Profit today, we'll discuss if investors should subscribe. Well, the issuance of one of the largest retail brokers comes at a time when the retail trading in financial markets has taken a quantum leap. Also, the drastic fall in equity markets with the outbreak of COVID-19 and the subsequent dazzling rise has actually facilitated the addition of new retail investors and also traders. Angel, the fourth largest broker in the country in terms of active clients on NSE as at the end of June, will undoubtedly be a clear beneficiary of this trend. Now, Angel is a technology-led financial services company and provides broking and advisory services. It also provides margin funding and loans against shares and is also into distribution of financial products. Now, Angel provides broking services across asset categories through its online and through its digital platforms as well. Now, to complement its broking business, it also provides research and investment advisory to its retail clients. Now, the distribution revenue is definitely minuscule when you compare it to the broking revenue, because that is the key driver of the revenue growth. New individuals and first-time investors in the capital markets have also seen a considerable rise during the lockdown. Now, the domestic broking industry's revenue also increased by around 10.5% CAGR between FY15 to FY20 to reach an estimated 22,500 crore rupees, led by a 34% increase in the turnover in the equity markets during the same period. Now, over the next 5 years, CRISIL expects the revenue of the equity broking industry to grow by 11 to 12% CAGR. A well-executed digital strategy has definitely enabled Angel to grow its business exponentially in recent times. For instance, Angel witnessed a growth of nearly 2.5 times its average monthly gross client acquisition run rate. Also, the average daily turnover more than doubled from 25,317 crore rupees in Q1 FY20. Now, that is to 61,900 crores in Q1 of FY21, placing Angel at the forefront of the turnover-based market share for the retail broking industry in India. Now, the Indian industry of broking is highly concentrated, with just top 5 brokers commanding around 41% market share when you talk in terms of active clients in NSE in FY20. Now, we see this trend continuing and Angel being one of the top 5 players to gain the market share going forward from here. Now, despite the rising turnovers, revenue trend can also be highly volatile, and that is to be looked at. Now, the rising competition, also emergence of zero-cost brokers, will definitely continue to exert pressure on the broking yields, and in the long run, Angel is well positioned to benefit from the favorable trends like increasing share of financial savings, rising equity market capitalization as well. Now, talking about the valuation, at the upper end of the price band of 306 rupees, Angel is priced at around 25 times estimated earnings for FY22. Given the cyclicality of the business, the valuation currently appears quite full. The valuation also is at par with the peer ICICI Securities, which is trading at almost similar multiples. However, despite the pricey valuation, we may see some listing gains given the positive momentum for the broking industry currently that we are witnessing. Also, investors' interest in the primary market offerings is also at a high point, implying that there is good appetite for the issue at this point in time. So, investors can definitely bet on the IPO for listing gains and then wait for better re-entry opportunities.